The risk trade is back on. U.S. stocks set to rally for a third day as Europe gets aggressive with its debt crisis. Greek Prime Minister George Papandreou makes the rounds, trying to convince Germany to lend it money and that the country will implement severe fiscal reform. Congress avoids a government shutdown, and commodities surge, with silver up almost 10%. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, let's get to it. We saw a big rally on Monday. Is it for real, or is it just a technical oversold bounce?
At this point, I'm not sure if it's for real. All I know is that yesterday was very confusing. Everyone came in, including myself, thinking that we could fade the up open, that last week we had huge down week destruction in a lot of sectors. So today, with the futures up 10 and 12 handles, the right trade was to try and fade it, but the market had strength all day. You have a lot of things going on behind the scenes. It's the end of the quarter, the end of this week. For buy-only mutual funds, it's the end of the year for a lot of them. So a lot of them who have cash, they need to put it to work, otherwise they lose their allocation. And some of them didn't want to make themselves look so bad, so you have a lot of marking up. You have some good news out of Europe, or what could be perceived as good news. Who knows what it'll be.
Headline news that the market's interpreting as good. Okay, so if we have to kind of wait for real direction next week after the quarter closes out, how do you position yourself this week to take advantage of the rallies, but also protect yourself from possible downside?
Well, yesterday we saw a lot of reversal patterns in a lot of the being down sectors that have been avoided but were good from the short term. You also saw the lower end of the range hold in the SPX. So if you take a quick look at the SPX, a lot of us did get tactically long midday. This was that move on, what was this? This was Thursday, which retested the low back from August. So right there, some technicians, some of the bulls were saying, you know what, we now have a double bottom. You have a low, another low, double bottom, and then the bears obviously were saying, but you broke, the ascending channel to the downside. So now where are we at? We came right back to test that area. Let me look at it a little closer for you. And we're opening up right back into that range. So right here, where the 10-day and the 20-day converge around 1178, I would say if you did get long yesterday on this reversal, on the micro strength, I would be selling into this resistance because the market still has a lot to prove. It still needs to prove that it could hold higher.
Would you hold on to some of those positions in case it does go higher in the short term?
Well, it depends on your time frame. For me, I'm trying to actively manage it. Okay. I went from short to long yesterday. Now I'm pleasantly surprised with this up open. I'm going to sell the majority of it on the open, book the gains, but then if we hold higher, maybe I'll add to them and see if they can go a bit more, considering it's only Tuesday and we have a lot going on into the end of the week. But I would take profits and not just chase this up open. It needs to prove that it could hold.
All right, so let's talk about exactly what you're interested in, because you mentioned you were buying a lot of the laggers, which is a rarity, right? So we go to the sector spotlight. Let's go to the XLF. Did really well, but in the individual stocks like a Goldman Sachs, JP Morgan, I don't necessarily think their charts are supporting this rally.
So right now, I don't think you need to be in a macro tier one, any of the banks, but if you are, just hold them. As far as this 3-day bounce, it's been a rarity. Can it continue? Do they just sell them today, or does it go sideways? If you look at the XLF, you will see that this group had a nice bounce.
Because nothing's fundamentally changed either with this group.
Well, nothing's changed, but technically, you know what? You had a move from 1150. We broke below this range. It actually pierced this support, which should now be resistance. Yesterday saying you need to cover some, but now it's opening right back into this 1240, 1250 area. If you were long from Friday's reversal, I would sell some in the middle end of this range, because if you look at something like a Goldman Sachs, it still looks really ugly. Yes, it bounced off 90, but it's going to have massive resistance in this 104 area. And then, Alex, you and I, we talk about JP Morgan as being the class of the group. But even they
hasn't been holding up, hasn't been showing a lot of strength either.
Exactly, and if you look at the chart here on JP Morgan real quickly, you will see that it was a potent day yesterday, great for active traders that wanted to buy. When it went back into this gap, it went higher, but we're gonna have some massive resistance around 32 to about 34. So as an active trader, take some profits into there. If you did get long for a macro tier one, just make sure it could hold higher. This is not one of those groups that could continue to power ahead.
So investors don't get sucked in, traders be flexible. Is it the same strategy for the OIHs? You know, up almost 4% yesterday after getting pummeled last week to down 14%. But oil's holding up. It's over $82 a barrel today. And a lot of reports that I read said that that sector was really oversold, and the supply demand did not correlate to that low of an oil price.
So if you put both of those together and you combine them with some tactical strategies, and what we want to be here is tactical. OAH has got us stopped out 3 months ago. The last 2 days I've been talking about it because I'm like, just like that. Fundamentally, they could be worth a look, but let's wait for the pattern. If you see here on the OAHs, perfect red dog reversal. We all talk about it. We love this pattern here. You know why? Because look what happened. It tried to trade below this 108.31, got people stopped out, got some people short, came back above it. The buy strategy was to buy at 108, which is what we did yesterday. I'm still long some. First target would be a gap fill up to about 115, 116. This is where I'm going to sell some. And then if you want to trail it, maybe it retests this broken wedge around 123 to 125. But this group has a lot to prove right now. Just a great trade. Maybe it amounts to a little bit more. If you look at stocks like Halliburton, Schlumberger, they all look exactly the same. So you don't even need to get the stock risk. You could go with the ETF because real quickly, you look at Halliburton, same type of pattern, you know, red dog reversal, tried to break through the low, close strong. It has room to 35.50, maybe up to 38. So why take the stock risk right now when you could use the ETF for a little bit of a gain?
It's just we do have some fundamentals that are supporting higher prices, say, versus the financials. Can an investor go long here if it does hold up? You don't want to chase it, but can you get in?
I think if you want some exposure in anything, only tier 1. You know, tier 2 is a little bit more heavy. Tier 3, you think everything in the coast is clear. We're far from the coast is clear. Right now, this is just a trade. And if you want to stay with it, make sure you trail it.
All right, let's go to the industrials because not having a good time of it. But how did it play up yesterday?
This actually didn't make new lows. The industrials almost look exactly the same as the spiders. I'll show you a quick look here. It too, you know, it's just filling a bit of this gap from this lower area. It held the lower end of the range. Has some room to about 30, 75, 31. I'm not very excited about this group.
All right, let's round it out here with the JJC. I wanted to hit on the copper ETN because it's up 1% on Monday, but it was, you know, an 18% margin hike. So that was really interesting. Also, I had read that China imported, you know, 21% more copper in August. I mean, there are a lot of bullish fundamentals here, the same kind of story as oil, even though prices haven't held up.
Well, it shows you that you could be a market timer. So put those headlines. I actually looked at the FCX yesterday because I'm familiar with that stock. Freeport, exactly. I saw a little bit of a bottom pivot, so I did get long. Show you the quick pattern here. It's been annihilated from 55. Yeah. You know, it held this. It couldn't even make a new low, so my entry was right around, I think, 32. It's now trying to get in this gap. I think short term, you could easily see a gap fill to about 36, but then you're going to see massive resistance in the 40 area. I'm probably going to sell most of it today and just take that trade. But if you think the economy is getting better, if you think copper is overdone, stick with FCX versus that low. I would say use a 32 stop.
Just one warning sign for FCX is that there's some strike issues going on in some of their minds, so it's going to get a lot of noise related to that. So that should be some short-term headlines for you.
Oh, so I should go sell it right now then.
Hey, I'm not the trader. I just bring the story. All right, we'll be right back with some more stock picks in terms of tech and some quick ways to make some cash, so stay with us.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as this market's concerned, you know, we got to take off those glasses.
All right, welcome back. We are going to get into high beta tech, what's moving, what's not. You know, the tech did not hold up well yesterday at all, Scott, and I want to start with Apple. It did not really participate in the rally on worries that the iPad shipments might be lower than previously thought for the fourth quarter. Would you be buying on this weakness and getting interested?
Well, yesterday we went over some levels for Apple. We had the high level support and then a level underneath it with those headlines. But I think it's not fair to say that tech didn't perform yesterday.
Okay.
It just didn't lead. You know, I know we're used to it leading. We're used to it being strong. The industrials.
But it doesn't lead. Doesn't that tell us something, though?
Not for one day. For one day, it's worth taking notice. If it's like 5 days, it could lead to a problem. But the bottom line is, if you look at the Qs here, look where it's at in the chart. All right, you saw the spiders all the way down the lower end of the range. You saw the XLI, you saw the OH. Look where we are. So I think people are just a little bit spoiled that it had to be the first out of the gate. It did hold 43. It just went back above this ascending channel to the upside. We're trying to fill the gap. I do see some resistance around 56, but it shows you how here was your Tuesday push-through failure to get out of some. That was your momentum area to sell some longs. And now this could be your area to buy some back. So tech, I think you could be in more than a macro tier 1, perhaps a tier 2, just because it's proven that it could hold higher, but you have to be very selective.
So particularly then with Apple, would that be a good tier 2, especially because it didn't really participate yesterday, so you might get a good deal?
I think, I don't know what happened with JP Morgan in their note. It could have been some kind of fugazi behind the scenes, get a lower to buy it.
It was
anyway.
a note. No, it was a note dealing with one of the providers of that make the iPad. So like
Right.
maybe they make a chip or something, and so it was dealing with that company and saying what happens if the iPad demand is lower, and that was extrapolated into iPad demand will be lower.
Right.
But we heard the JP Morgan note in the U.S. come out and say, you know what, not true. We're fine with Apple. We feel confident in iPad shipments, so maybe it'll see a little bounce today.
Well, it's seeing a bounce today, and if you look at the chart, all in all, it didn't really pull back much. This was, your topping area where we said not to chase strength after a big, huge move or excitement. But look what it did. It held the 21-day. It held the prior pivot. So all in all, I think Apple's taking it in stride. I'm long some Apple. I did buy some on the dip yesterday. I do think that if you want to sell some, sell some if you're in a tier 2 at this 410. But stay tier 1 long Apple. I think the story is still intact.
And same deal for Amazon, up almost 3%. You want to take a little off the table, but stay tier 1?
Yeah, Amazon also macro tier 1 candidate. It held the 21-day moving average. Most of the indices and stocks are well below the 200-day, let alone holding the 21-day. So that's showing you relative strength. If you look here on Amazon, this was your price to rebuy it back. Here was your quick top after a big move. Came in, held price support, held the 21-day, got on its horse. If you want to sell some into resistance, fine, but hold tier 1 Amazon, it's also in the game.
But Baidu, you were saying yesterday, did not deserve to be a leader anymore in tech. Do you still feel the avoid way?
Yes, I don't think Baidu is a tier 1 long. I do think you could get a Q trade to put a small double bottom. If you did get stopped down Baidu, right here when it broke this, this wedge to the downside, and then you see a double bottom versus 115, you could trade it long for perhaps a move back to 130 or 135, but this is a very risky scenario. I don't think investors should be looking here right now.
And Intel, we kind of deemed a leader yesterday, so let's see if it has the same kind of strategy as an Amazon and Apple.
Intel, when tech was down last week, all the markets were down, Intel held higher. I'm seeing some relative strength there. So a different scenario. If you want something with more liquidity, bigger bang, not more bang for the buck, but just a little safer, look where this is. It's above the moving averages. It's right near the upper end of this small range. I think Intel you could add to above 2250. It still looks good. This could be a macro tier 2. Believe it or not, I haven't said that about Intel in a while.
Yeah, exactly. And then to round it out with SanDisk, we don't talk about that a lot, but it was showing some good strength yesterday, labeled a beaten down stock by Sternaghi in a good way. Like maybe you can buy it on the cheap. What's
interesting with SanDisk is sometimes how you could read into the trade. I missed the up move, and I kept trying to short it. I was up 7 days in a row. I'm like, it's not going down. Maybe it's a new chosen tech leader. And if you look at SanDisk right here, I'm not involved, but I think some people can be involved. You had a big move from 34 all the way up to 44. Look how it held higher. It didn't pull all the way back in. It held there. Demand stayed there. I think something's going on in SanDisk that people don't really know right now. You could be in a tier 1, macro, and some momentum guys might come in above 44 because people who are shorting this and are getting stubborn, they're going to get squeezed, and this could make another move. All right, let's get to some quick ways to make some cash. I want to start with McDonald's in particular. One of the top stocks in the Dow for the third quarter, has a yield 3%. It's like $1.50 away from its 52-week highs. I mean, have you missed the boat with this one? I don't think so. I think McDonald's, I don't talk about it enough, held in there great, above the moving averages. Macro tier 1 if you're a portfolio guy. And if you take a look here for momentum, it could see another move if it starts to get above 90. I can't believe this is so close to the 52-week highs. This looks good. I would stay with McDonald's. Is it a sexy mover that traders like, or is it more mellow like a Microsoft? I think it's something that doesn't move as fast, but it's been showing good gains. It's not like a Microsoft. Microsoft isn't near historic highs. They can't even be put in the same sentence. And then more like the interest by traders. But anyway, okay, CROX. Retail holding up pretty well. Stock almost up 3%. What do you want to do here? CROX is defying logic. It's holding up better. Institutions like it. I'm not long it, but a lot of guys love this thing. And if you look here, it's above the moving averages, so it's playing by my rules. This is in the game for new highs for the year, so this is worthy of your attention.
All right, what about WYNN? Did not really participate yesterday, down 1.25% or 1.5%, excuse me. Good for the long term then now. Good level?
Well, WYNN and the other casinos had a bit of a bigger down move than I would have thought. These stocks are on my go-to list. They all had their push-through failure, but they all came in a lot lower than I would have liked. So if you look here with WYNN and LVS, I would take a bit of caution. If you look here, this was your push-through failure when it tried to break out, came all the way back down. You know, it's below the moving averages. Yes, it did hold this 125, but if you long it, I would make sure you have your stop in at 128. I think for cash flow, perhaps it does fill this gap. You look right here, it's not near the gap. Usually if it's strong, it would already be in there. So just take a little bit more cautious with these casinos.
And what about MasterCard? Because obviously it's moving with the financials, but the financials can't hold up, which we saw from Goldman Sachs and from JP Morgan. Their charts don't look that great. MasterCard could get dragged down too.
Well, MasterCard right now is following an uptrend. It's holding its 50-day. I think MasterCard and Visa are still institutional quality, but you have to have a high level stop. Let me show you where that would be. You look here at MA. MA is still riding this uptrend. It's still riding the 50-day, and it's great until it changes. Right now you had your push-through failure. Here was some downside follow-through, held the uptrend. So just, I would say if you don't want to be committed to long-term MA and you think that the consumer is going to change, stop yourself out of 322, but it still looks okay.
All right, rounding the section out, we want to go to CF. So Goldman Sachs had a note I read over the weekend saying that fertilizers are cheap, expecting consensus estimates to move up 5 to 10%. Stock popped almost 4.5% yesterday. A good group, good mover.
Well, this group also looked like the OAHs. I looked at the MOO. I want to show you that before CF. It also did a reversal strategy yesterday. So if you look here, just to show you how patterns look similar, okay, look what this did. In the lower end, got crushed, but what did it do? It traded below, came back above. Your buy signal right here on this was 44-ish. Okay, now it looks like it could fill the gap so this group can get a bounce. If you look at CF, which is showing relative strength, which held longer-term support, it not only broke higher, it's already in the gap. I think this has some room to about 158, 159, but it has a lot to prove to be a longer-term investment.
All right, and finally, we're going to wrap it up. Gold and silver. Of course, we have gold up like $80, silver up 10% already. Are you going to participate in this rally that we're seeing?
I missed the down move in gold. I know we talked about selling or only getting to tier 1 when it was getting very choppy in that upper end of the range. Some guys actually got short. If that was you, congratulations. But we are not pigs when it turns to moves. We like the meat and potatoes of scenarios. The juice could be very slippery. And yesterday,
There's
midday,
so many metaphors going on with that.
a lot of red dog-isms. Anyway, $300 off the highs. Yes, it was a great time to cover your shorts. If you didn't, you're a pig. You deserve to get squeezed today. You look at gold here today. That was a little harsh. I'm sorry. Anyway, after a move from 175 down to almost 155, great area to cover. If you did get long versus support, I did get long a little bit yesterday. You're very pleasantly surprised with a nice $4 or $5 move in GLD and a nice percentage in gold. I would definitely sell some ahead of this 165 because this 165 will be big resistance in the GLD.
If you didn't go long yesterday, you don't want to chase, you need to hang out and see what the direction
Yeah, you
shakes
have
out.
such a huge travel range. Gold was down like $80 yesterday. It's up like $75. So
Right.
you just missed like $150. Let it go sideways. Let it show that it could hold higher. Then perhaps you get back involved.
And options expiration is today, so there's going to be some volatility. I spoke to one trader on the floor at the NYMEX who said after that shakes out, 1700 could be in the cards, but you have to wait for the direction. All right, so that's it for us for today. I'm Alex Steele from the street. Happy trading, everybody.
And I'm Scott Redler from T3. Make sure to follow us on the virtual trading floor and in the chat because we do tell you what we're seeing over the course of the day. And yesterday, we saw some of the composure change. We could have had you ahead of the curve. And if you missed that, watch the recap. We'll go over what worked and what didn't. Have a great day trading.